Greetings, everybody. It's Jeff Scott. This is my weekend review. It is 11/26/2017. It's 8:41 a.m. Obviously, futures are not out. We also will have sort of a unusual Friday data set since it was only a half day in the market, which will skew volume. I titled today, Thanksgiving Day Rally is Amazing. And you all know, if you've been here before, what my favorite holding is of mine. My largest holding is spelled out in yellow letters there, Amazon, and it was amazing. Not expecting to see that continue, although with Amazon's move into med tech with Cerner, potentially in the next week or two, perhaps this rally continues, at least in Amazon. As always, it's for education purposes only. Any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. That means nobody pays me to say anything good or bad about them, and I pay for the tools that I use. My email address, my screen name sound a lot like I work for HGSi. I do not. However, over the last decade or more, I've always helped new users and established users and done some unpaid voluntary support of the program. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I title my educational series, Be Your Own Guru. That's the title of the seminar coming up, which I'll mention in a second, and where I try and take things that I've learned from great folks like O'Neill with Canslin, Morales and Catcher, Woodward and Brown, John Person, Van Tharp, and George Lee, and synthesize that, adding other people like Alexander Elder, Bollinger, to come up with what works for me. And I became my own guru, which means I don't rely on other people. I rely upon myself. And I think that everybody needs to have the ability to rely upon themselves. It never hurts to listen to other people and help form what is your opinion, but it's nice to have your own foundation. For those that haven't heard me talk before, I probably should update this. My current returns are 77%. In my trading account. As I've said before, I do segregate some of my money. I have other people who manage it. I manage an account that is large and has been a great year. But I do this without being tied to my computer all day. It requires less than an hour each night. And I work full-time building another company. Topics of the meeting are on the left. Everybody should know by now the housekeeping, $400 if you're attending John's meeting, $500 if not. It's beyond the time of changing my numbers for the live meeting, but I just wanted to review that all attendees live and online should have received invites and access to the Dropbox. Yes, in yellow it says online. It's yellow for a reason. Anybody that wants to attend online will be guaranteed archival copies of all live presentations, PDFs, access to the Dropbox, indicator sets, and everything I provide except for food will be supplied via the Dropbox. We will do every attempt we can to project it live. Unfortunately, I could not get a third-party company to live stream it, so I'm working with some friends who are willing to come in and play with the technology. If we lose the online feed, there's no indemnification to that. You'll still receive all the archived versions, but my guess is we'll be okay. There is a webinar Monday evening. Invite's been sent over the weekend. We'll review Webinar 1 and present Intro to Options. Webinar 1 is in the Dropbox. After completion of the meeting, I will continue to do closed webinars for attendees, both live and online, until I feel like I've answered all the questions. It might be one, could be two, could be three. It'll be whatever it takes. Dinner for the live attendees will be Saturday night at the Capitol Grill, 5 minutes from the hotel, walkable if the weather's okay. And if joining, please reconfirm with guest name if applicable. I own a lot of tools. Some of the ones that matter are listed here. And you'll see me tonight use TradeStation, Thinkorswim, HGSi, EdgeRater I've already done. And you'll see some of the screenshots, and I'll talk about some of the things that I use it for. HighGrowthStock.com. Here, as I said, I'm independent and not affiliated, but I do like to promote it. Free 30-day trial, no credit cards asked. Under investing strategies, you'll find a lot of videos by some smart people like Ron Brown. Gil Morales has some stuff there, and I have hundreds of them there for educational purposes only. Stock patterns are cyclical. I say this every time, and I keep saying the same thing. Just as soon as we think we're going to roll over. And last week, I said the technicals were weak, but seasonals were strong. And my gut was we were going higher, and we broke out to higher highs. Now, how long does this continue? We are certainly not here coming out of a good base that I expect this to go on for months. And the question is, was that it? And do we fall back this week and join the dollar with a significant drop? Or do we continue to hit new highs and go into the new year and then we drop? I do believe a drop is coming, but I'm not certain that I think this is a major correction. We've had a series of 3 or 4% corrections over the last year, nothing bigger, and we are overdue one of those, and we're starting to get extended. But some of the things that I'll show at the meeting, my long term and why I thought the Hindis might not work this time, I've got some data to show at the meeting. We'll take a look at that. So I'm still long, I'm nimble, and I'm willing to get unlong very quickly and save my what I've made this year. Where we are matters. So I'm stocks and calls, selling puts, covered calls, and bull put spreads when I think we're going higher. In times of indecisions, cash smaller positions and selling premium. And when I think this market is done, I'll be doing bear call spreads, buying puts, selling calls, shorting stock, and buying contra ETFs. Again, Friday is a skewed view because volume was quite low, but a couple things to point out. Utilities, which starts down here, were probably the strongest group. Healthcare was mixed. Home builders with low interest rates remain extremely strong. Social media has some good winners, as do some of the foreign markets, especially with a falling dollar. Semiconductors continue to be strong. The groups with positive on edge rater scans were discretionary and staples, although they look mixed here. Some hotspots in retail. Financials were weak and energy was mixed. Major markets, I think, tell a big story, and of late we've been trying just to go into the source of Thinkorswim and look at the markets there. So here are the markets in Thinkorswim, or eventually we'll have the markets in Thinkorswim. Come on, here we come. Perfect. Make this bigger, and I'll just tell you what I think. Which normally I would say doesn't matter, but I think that's kind of what you're here for. So the first thing you're going to notice is across the board on the equities, you're going to see new highs for the year, new closing highs. Here is the E-minis, clearly in a nice uptrend, stock price above the 17, above the 50, and above the 200. What's not to like? Yes, we've had a long run. At some point, we will visit the 50 and the 200. As you could see up here, the Bongo Daily is green. We had a Mobo breakout on Friday. Forces are positive. Here's the one-day price change in the range. If you don't have these indicators and you're either live or online at my meeting, you'll receive everything that I have in Thinkorswim, and I'll try and create URLs so you can just update, import the URL, and get my charts and indicators. The NASDAQ, new closing high, breaking out to a new high here. Everything looks great. Look how strong the OBV is. The YMs, a little bit of a flag here for a couple days and then broke out Friday with the new highs. Came off the high at the end, but still closing near the top of the bar. The big surprise, the Russell, flag, breakout on Friday. Does that continue, or is that a one-day wonder? Now we'll go to what's weak, the VIX. With the market strong, the VIX has failed now again at the 200-day moving average and is pulling back into its lower part of its range. These are the futures. And then if we look over here at the dollar had a failed attempt here and now broke below the 200 on the weekly moving average. Hard not to like, in my mind, these the daily indexes. Very quickly, let's go through the weeklies. So, as we go through the weeklies, big shocker, E-minis, new high. NQs, YMs, what's not to like here? Look a lot like the dailies, don't they? But it does say the weeklies. And lastly, the dollar breaking down. I wonder if what I showed you before was the weeklies. So let me just make sure that I didn't screw that up. Wouldn't be the first time, would it? I don't think so. Let's just switch here to the dailies. Yep, that was the weeklies I showed in the beginning. So now let's just look at the dailies. My apologies. Showed you the weeklies twice. But again, E-minis look great. Coming out of a squeeze. That's the difference here. NQs. YMs, positive day, bouncing off the 17. The IWM doesn't look as impressive here. The flag hasn't broken out, but the breakout was on the week. And then on the dailies, as you the VIX breaking down as well as the dollar. Apologize for that. I showed you the weeklies twice, thinking the first one was dailies, but it changes to daily so I don't make this mistake again. I think the message is the same. The markets are strong, dollar is weak. And then I like to look at my Genesis view where I have a column of E-minis, NASDAQ, Russell futures, NYSE, and Dow futures. Top row is daily, then weekly, then monthly. Look at the monthlies. Why would you not want to be long this market? Look at the weekly, several new buy signals coming in, everything breaking out to new highs as we just saw, and the dailies except for the Russell where they still have to work off this flag, setting new highs. Markets look strong. Rates ease as dollar falls. You could see both the 10-year and the 30-year have eased. That's why builders were up and banks were down. Insurance was also weak. AD lines, you can't see it well. The white is the AD line, the yellow is the S&P. They're both hitting new highs, bullish. Here's a better description where I look at the AD on the NYSE, setting an all-time high. That is, to me, a very bullish signal. And then the diamonds are in green. In yellow are the spiders, and blue are the Qs, and red is the Russell, and they're all setting new highs. And those are not the new highs, the ADs on them, those are the ETFs that represent the average. Breadth strengthens but not overbought. Both stocks above the 200-day and above the 40-day increased. And interestingly, the one danger sign, which was stocks at a 3-month new high, new low, actually eased some this week. Daily McClellan and the weekly McClellan, I look for extremes and divergences. I don't see an extreme, but I am getting a little bit nervous seeing the indexes, in this case the spider at the S&P at a high, yet we're not hitting a high on either the oscillator or the summation index, which is still zero. So that's one kink in the armor, and I'll continue to look at that. The buckets were 50-50, and now 68% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. If I break out the buckets, I can see that we're not overshifted to the right with only a few stocks above the bands, none underneath the bands. Still a healthy, bullish-looking appearance. If I look at the Hindis, we had a Hindi free zone for the week with no Hindenburgs. Just in case you wonder, why do Hindis ultimately go away? They go away for one of two reasons. The market breaks down, and therefore you have no new highs on either the S&P, or it takes off and you don't have new lows. So those are the reason why they disappear. So if you have a number of Hindis and the market breaks down, you don't have the new high piece. Your moving averages drop below the rising amount, and the Hindis go away. So Hindis are sort of a self-fulfilling prophecy. If they don't work, they go away because the new lows drop. And if they do work, they go away because the new highs drop. So we don't have any active Hindis. Market tone, You know, it's improved. It's still not good, but we now have green and yellow, but only green looks like it's probably on the NASDAQ. Sector strength improves. Again, not a lot of green, but we've lost the red. And discretionary and staples on the consumer side are leading. If I look at the canaries, here's the canaries. We track those, we watch those, and use these as an indicator of the overall market. And they've been living above their 50 for most of the past year, and they appear to be on the verge of breaking out to new highs. I do note that the weekly bongos have been red for some time, and we shall see, but they look strong, as do the index that I put together in June of leaders, looking for this to break down, and it really went sideways to a slight uptrend for a long time, and it too appears to be ready to break out. Know your news and earnings. A lot of news this week. I point out since Friday is the 1st, there are no monthly unemployment numbers. That's a good thing because I'll be in a meeting, in a seminar, and probably won't be actively trading much on Friday. A lot of bonds stuff, some Fed speak. All in all, a mixed week for news. Now, there are a lot of earnings. Now, I look through, and not a lot of stocks that I follow, but Ulta is one. Ambarilla used to be a leader. Kroger's, Workaday, are some, Lazy Boy, I guess Marvell, Nuance. So there's some big ones. Barnes & Noble, Momo, I'm not in that anymore, was in it for a while. Tech Data. So there are a number of things. You need to know the earnings. As it says here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. Canaries lead the market higher. Dollar falls. Rates fall. Senate tax vote in the crosshairs. AD lines break out to new highs. We continue to climb a wall of worry. And seasonality remains strong. We'll do my usual top-down review. Excuse me. And now on to the charts. Now, I do things exactly the same every week because I like consistency, and that's what I do in my own trading. So I'm going to start by pulling up my TradeStation, which is the new 10.0 version, which remains, I believe, as a beta and remains somewhat buggy and slow, but I do like the look and feel, and it was more stable on some of my scanning, which was great to see. What I do here is I look at 6 points on the major indexes to get a sense if the markets are strong or weak. So, point number 1, are we in a buy signal or a sell signal? These are person buys. Green is a buy, red is a sell. I look at daily, weekly, and monthly, and we're in a buy in all three. Second, I look at the color of the paint bar. Green is an elder impulse indicator that says it's okay to be buying or holding. Red says I should be selling or holding and not buying, and blue says I can do whatever I want. I'm green, blue, and green, so that's still pretty bullish. The third thing I look for are these red dots. Those show some exhaustion, some evidence of MACD divergence, and it shows we've been running a long time. So that's a small kink in the armor on the weekly. Fourth thing I look at, where am I within the auto envelope? It doesn't like to spend a lot of time above this envelope, yet it can track right up the envelope, so it's not the end of a rally, but it's something to watch. Fifth, I look at my high jump. If I'm above 90, I get nervous. We're at 55. And lastly, I look at my weekly bongo, which is green. And the weekly bongo is the second dot. I pay much more attention to that than I do the daily. Those that are attending my meeting, person signals are a purchase. They're in Thinkorswim. I'll show you how to use them. The elder indicators are about $300 from elder.com. The high jump you'll be provided, and you'll have the ability at a deep discount through a third party that sells the multi-time frame piece that allows me to have 3 bongos on a daily chart. You'll be able to purchase that or get a single bongo from me. So I would say, except for the little red dots here, the E-minis look remarkably strong. No shocker there. The YMs very quickly look really the same, except they're not at the top. They also have the exhaustion dots over here. The NASDAQ should be one of the strongest, and it is riding above, even has an exhaustion dot on the daily. The weekly, 78%, getting more and more overbought, but not yet at danger zone. Notice the daily bongo here is green. The Russell 2000 had been a little of a laggard, but it too had a big run up this week. Red dots here, red dot there, still green, 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 buy signals everywhere. 69% weekly and daily bongo are green. Markets look strong, folks. That can change on a dime, and obviously they climb a wall of worry. All it takes is a terrorist attack, the Senate to say no, more sex scandals in the White House, and things can fall. But that's what climbing a wall of worry is all about. What dropped this week was the dollar. Dropped hard on Friday, and almost to the point where it's getting oversold. But you could see a sell signal came in on Thursday, sitting on the bottom of the envelope, a sell on the weekly and a sell on the monthly. High jump is down. The weekly bongo went red. So dollar looks weak. The VIX, something else that was weak this week, and you could see the difference here is you actually had a green dot here, which is a MACD convergence. So suggesting perhaps that maybe we're going to see a reversal in the VIX. High jump is low, still weekly bongo. I still think the VIX is going to stay low for a while. And then gold did not have a good day on Friday. It was sort of a sideways day, inside day as well. But if the dollar continues to fall, does gold have some life? And it's in a daily, weekly, and a monthly buy signal. Weekly bongo's green as well. So hard not to feel strong about the markets here. Now I'm going to open up my designer view. I'm going to have to adjust my charts a little bit, probably, because they're set for a different resolution, but that looks okay. Let's go down to Woodward & Brown user groups. Let's go to Major Markets Plus. Let's open up a warehouse view. Alrighty, and let's make it fit. Now, I think I mentioned last week how wonderful it is now to have real-time quotes in HGSi. This is all new. It's wonderful. Thank you, Verizon, for buying Yahoo and then screwing up our end-of-day or delayed quotes, because it forced HGSi to build an interface so that we can pull in real-time data from Thinkorswim. And just to show you what I mean by that, because this is a critical, major upgrade. Thank you, George and Matt. Intraday must be enabled. Under intraday options, Thinkorswim. You can get it updated every whatever, okay? Down here, I got to have Thinkorswim on. Under update, I can hit that during the day. And when I click start, which I'm not going to do right now, it will give a real-time update using current quotes. Now, it may take 7 minutes or so to go through the update, but you'll be able to run the same update you do at night during the day. If you're in a chart, and I had to size it anyway, so it's a good thing to do. And this is awesome, by the way. Again, kudos to the program. And, you know, I'll throw out a little shout out to Chris White of HGSi, who, of EdgeRater rather, who built a quick fix that was able to help us pull Thinkorswim quotes as well. But, you know, two smart groups doing what they can to help their users. So if I hit, you won't see it now because we're after hours, but if I hit an F5, whoops, in my case, I think it's a function F5, but if you hit the F5, during the day, it will update the quotes to real time. This is a huge upgrade, folks. Thanks again to the proprietors. All right, so I'm in Major Markets Plus. I'm going to go to top-down view. And what this does is it looks at 1 day and 5 day, a little bit of force 13, so that's about 3 weeks, but heavily weights 1 day performance. Make sure you're ranked by the combo, and it shows you over that 1 day period of time. Let's make this capture all of them. The strength in the market was actually oil this week, as people think the new range might be 60 to 70. NASDAQ and small caps up at the top, Russell here, S&P down here, S&P 100. Biotech was weak, gold and silver were weak, as was the dollar. That probably won't persist with both going down like that. So we'll see if gold doesn't pop. Now, just to review, I'll look at the S&P 500, and I'm going to go to something very clean here, which has weekly bongo, daily bongo, has Hindenburg with a different calculation, and high jump. And then down here are kahunas, and on the bottom would be eurekas or phoenixes. Big uptrend, as we've talked before. At some point, one would expect a revisit of that 50, and that would be about a 2%, not very big of a pullback. If I look at the Dow, I've talked about those pullbacks before. Down here to the 50, 2%. Big uptrend. If I look at the NASDAQ, what's not to love here? And we talked about would it pull back and take off? It never even pulled back. All we got was a pullback to the 17. From here to the 50, if we did get that pullback, 3.6%. None of these are big problems. These are all things you'd expect the market to digest and move to higher highs and would probably be healthy. And even the Russell, if it pulled back to the 200, it would be a 1.8. And this big slow grind down here was a 4% return, or 4% pullback. So, we are in nice uptrends throughout. At some point, we're going to get pullbacks. Markets never go straight to the moon, no matter what they feel like. But I'm not calling for the big mother of all corrections. I think a 3 or 4%, and then we go to new highs again. Now, what would be a deeper correction? Obviously would be a pullback to the rising 200. Let's say it pulls in here. That's only a 9% correction. And boy, would we be sharpening our pencils then. We'd probably be upset because our portfolios may take a hit, but that would set up fantastic buying opportunities. If I look at the dollar, we already talked that it's weak, and you could see that here. And we talked about would it bounce or would it break down? Well, it's broken down here. So the dollar is weak. How low will it go? The VIX also is weak, which is good for the market. And it's when the VIX falls is when we see the stocks go up. Now look at the long tail. It's sort of a hammer candle there on Friday. I'm not going to put a whole lot of emphasis on it because of the low volume on Friday. But when you see something like that, it's usually a reversal. It says you're going higher. Just like when you see this, it tells me I'm going lower and lower and lower and lower. So it'd be interesting to see. Here is one, a bottoming tail, and we went higher. Bit of a bottoming tail, we went higher. So this is a little worrisome. We'll watch what it does. Again, I'm not going to put a whole lot of weight on it. And, at some point, does gold and silver wake up? I thought it might be breaking out here. It pulled back into congestion. Is now the time with a weak dollar. Notice the weekly bond goes green. Let's look at silver. Similar pattern, but has to break above the 200. And the miners were weaker. I haven't looked at them today, and they're still a little bit weaker than the metal. So, and their weekly bongo is red. So we'll have to see what happens there. Now, one of the things that I do is I kind of curious as to of the things that I looked at last week, which I've already unfortunately taken out, so I can't even show you. But this is a good view. If you like, for example, here's the stocks that were in my account last week, or in my account right now that I manage, which are a lot of positions. And I can see that last week Abercrombie was up 33%, Esperion was up 14%, Tech was up 10%, Salt was up 10%. This is the last 5 days. Juno, and my losers in that period of time was Veritone, BZUN, BioVeritiv. So you can see I had some losers. If I look at one-day performance, which was Friday, I think you probably see I did well because of Amazon. And so I like this view because I can go back and I can look at on the things that I'm owning or watching. what happened over 1 day or what happened over 5 days. When I put together my buy watch list, and like I said, I already killed last week, so I don't keep them. At least I don't keep them in the program. I break up into different groups. And so what I might want to do is start looking at, on Monday, what was the 1 day performance of broken out and running versus pullbacks ready to run, getting a sense of what's working in the market and what's not working in the market. All right. So we've now looked at the market, and I'm gonna load EdgeRater because I'm curious of something that I want to look at, and I'll look at together with you in a second, and I'll show you actually how I do it. So I'm going to go back real quick. My mouse is not happy. I think I need a new battery here, so it's becoming very difficult for me, although I got a lot of windows open too. Let me look at the S&P real quick. So this S&P has been in a good move since the end of August. So let's say September. And since the beginning of September, we've had a nice move up. All right. So I'm going to open up EdgeRater, and then I'm going to come back to that thought in a second. In fact, I'm going to hit start it, and then I am going to pause for a second. I'm curious what's working in this market. So I just created or brought over from my Dropbox a snapshot of the market from August 27th. I do it every Friday, so that's the closest to the 29th on the bottom. I am now going to go into the warehouse view, which is right here, and let's change these settings. Now I'm going to go and find that warehouse file. So I have all the what do I call that? All securities. Where did I put that? Come on, here it is. So that has all the fundamentals from, that's not the one. I want all securities 827. Let me look again. Yep, that's what I want, right there. Oh man, this mouse is killing me. All right, here we go. All securities 827. And we're going to start from September 1st, 2017, or abouts. Let's see. Start that Monday. All right. We'll start on August 28th through today. Actually go through Friday, which was the 24th. We're going to hit OK. And now I'm going to hit this green run. And this is going to tell me what's working in the market over that period of time. Growth, value, does ERG matter? And now I'm going to open this up. Look at my dashboard. So what do we see? Clearly, we're starting at 0 and ending up here at 10%. That ERG has mattered over the last almost 3 months. That EPS rank has outperformed, relative strength has outperformed. My favorite box 7 turnaround stocks are outperforming. So this is showing me that the stocks that have higher ERG are outperforming, which I like to see because that's growth and that's what I buy. And we could look at all the types of information that we have here that we drew that from. All right, so that supports my premise that over the last 3 months, growth has been leading in high ERG stocks, which is why I've had and others in HGSi land have seen a big uptake in their portfolios. Let's go to industry groups, hit the warehouse view. We have 174. Let's look at 2-day force up. We have 73 groups to the upside. Let's look at 2-day force down. We have 5 to the downside. Banks, life insurance, mass merchants, oil exploration. That's interesting. So over the last 2 days, which would be Wednesday and Friday, market's obviously very strong. Now let's look at what we have here. Now let's play with my scaled volume, and because now it eliminates the things that are up there just because of big volume. Semiconductors, e-commerce, wealth management, pharma, steel, casino, specialty pharma, biotech, healthcare. So healthcare has been a laggard of late, but it looks like it's picking up here with multiple groups. Semiconductors, right click, change index groups. This has been a big leader, and I see several interesting things here. They may have gone too far. So what do we see? Everything is green here, Bible gap up here, coming out of a squeeze, and this is advanced semi-engineering, a big move on a kahuna. Kahuna here would have given you a clue, breaking out there. I don't see any earnings, but this may just be because it's not in the database. Pays a dividend, cheap stock, big move. Data IO, a little bit more of a controlled uptrend here. Again, I'd have to go look at a different source for earnings data. Multiple 27, lots of demand, everything is green. That looks interesting. Excelis, this has been another one that's been a nice mover. It's not really basing, looks like it wants to go higher. Electro Scientific, a nice move. A lot of nice looking stocks here. This has been a huge leader on the semiconductor side, and semiconductor manufacturing continues to look strong. E-commerce discretionary. Interesting, Amazon only makes it to number 4. NETE, let me see if I can. Don't know anything about this company. Net Element, sort of a bottom fishing buy here. Had a big move on Friday. Doesn't make any money. I don't buy things like this, but with a big kahuna there, coming on mobile breakout from a squeeze. Overstock.com. Boy, this is when you want to buy right here. Why? You had a kahuna. You broke out from the moving average here. Group strength had turned up. You had a mobile breakout, a Bible gap up on a weekly bongo green. That was the first buy signal here. You could have also looked back here with the kahuna and saw the same similar pattern. It's a little bit extended here. You notice the high jump is up at the top. One of the reasons why I look for kahunas is it forces me to find stocks like that, and I'll show you my favorite scan for finding them. Yatra Online I don't like. Amazon, what's not to love here? A pocket pivot, a Bible gap up, all-time high, huge group strength. What's not to like here? It is way too extended, and it needs a pause to refresh. But this guy never follows any rules. The problem with Amazon, and I've talked about this before, is you almost got to close your eyes and deal with some pretty strong pullbacks. Each of these cost me a lot of money. And if you look at absolute dollars, they were big drops, but each time around the 50-day moving average, we move right back up. So I've stomached those, but it's mostly because I didn't need my cash anytime soon. Mercado Libre, Etsy, this one looked interesting. Uptrend, sideways consolidation, sitting on the 50 with a kahuna, and I have a scan that picks these up. So I think there's a couple of interesting ones there. Certainly Overstock's too far. Etsy looks interesting. You might want to go through the list. I'll look at wealth management. This guy got ripped around, and you could see 5 days down 7, 1 day up 7. Well, let's take a look at this, guys. Come on. Uptrend, pullback to the 50. Now, technically, uptrend, pullback to 50 with a kahuna with a weekly bongo green coming out of a squeeze is a lot to love. This is a high closed doji as well. It's just too volatile for my taste. 27 down to 21. It's a 30% drop. This is one to watch. Look at the group strength there. Pays a 2.2% dividend. Noah Holdings, pullback, broke out, extended. Too far for me. I don't usually go below the index. Back. Consumer electronics. Vox International. Coming off a bottom here. Don't know anything about this company, but I've learned enough over the years. If I see 1, 2, 3, 5 kahunas in the last 6 or 7 days, I pay attention. I'd set my stop down here where the PSAR dot is, maybe down around, it's at 7, maybe around 6:30, 6:25, giving it some room to run and just see what happens. Why? Something's going on with that many kahunas in a short period of time. Control 4. This has been a big leader. I don't love the fundamentals, but home automation's a big story. Maybe they're better than Crestron. Crestron is my wife's least favorite company. I'm not a big fan of Sony. The chart doesn't look bad. And I'm up to the index. So I typically will walk through the top 10 and see if I find something I like. Generic pharma. Lanet, breaking out here, pocket pivots, looks interesting. What's a weekly chart look like? I always look at a bigger time frame. And you could see this is way down in the pattern. Is something different this time. It makes money. It trades at a multiple of about 10. Teva has been a loser. All right, don't see a whole lot there I love. Let me switch this back to the regular one. Because I had used my modified, it maybe look different than what it looks like for you at home, just to point that out. Back, entertainment content, Lionsgate, and Eros. It's already extended. Yeah, boring. Casinos and gaming, I've got a position in Wynn. It's had a nice run this year. Caesars Entertainment, it's really sideways. How's it different this time? I guess if it takes out these highs, I might be interested. It's got great earnings coming in the next quarter. El Dorado, MGM, kind of all look similar. So going down the list is what I do, steel and raw material. I noticed that U.S. Steel looked good at the end of the week. Let's look at the things that provide supplies. You know, is this a bottom and is it turning up? Well, it's done it before. In fact, if I go back to the end of last year, it did it then. This was a upturn in the market with the election. Couple of kahunas broke above the 50 and it ran from 6.5 up to 12.5. We're at 6.5 again. We had our kahuna. Maybe it's going to see it again. Valet looks a little bit better, but I don't like the topping tail on that candle, although it was a coal company. I mentioned U.S. Steel looked interesting. We'll just show that to you right now. And you could see U.S. Steel is actually breaking out here. Specialty pharma. This is an interesting one, and I'm tempted to short this guy, but it's hard to short stocks that are breaking out to all-time highs. They presented some data of their immuno-oncology candidate. And it's an old, boring drug that they put in a different wrapper. And the market went crazy, doubling the price of the stock. It's nowhere close to an approval. They don't have any earnings. I don't know enough about it yet to say if I'm interested in shorting it. There's very little outstanding float short. But boy, this is a story of a stock that's run too fast, too quickly. And hard for me to be all over this one. To go long on and chase that thing. I mentioned that I do some scans. So let me show you what's built into HGSi. The first thing is under custom groups, and this is all you really need to do, although these are often extended, is to go into most recent under top 50, and it's going to show you what is thought to be the top 50 stocks in the market based upon fundamental and technical criteria. We looked at this one already. Here's a car services, don't know anything about it. Ballard Power, Now, these are interesting looking patterns. Here's a stock in an uptrend, pull back to the 50, a pocket pivot kahuna, everything turned green and it's breaking out. If I look at Ballard Power, uptrend, pull back to the 50, and all I need here is a kahuna and show me that it's breaking out. Data IO we looked at already. Excelis we looked already. Electro Scientific Industries we looked already. Yandex, the Russian Facebook, nice uptrend, bunch of pocket pivots here, green on the bongo. So you can find some great stocks by scanning here. Here's that control 4. So this is under custom groups and it's updated every day at 7:30 at night, if I remember correctly. In addition are a number of my favorite scans and others that are under the smart groups. So under my name are stocks with big volume. I have learned over the last 10, 20 years that I like to look at stocks who have big volume. So I have 3 times the average volume, and on a day that's a holiday, that's a big volume. Well, we already looked at this one. Too late. Gain capital, Bible gap up here, mobile breakout from a squeeze, pays a dividend. LM funding, no. Marathon Patent Group, something happened here as well, probably too far gone. And U.S. Global Investors, is something happening here. It's sort of a turnaround stock, broke out off the 50, multiple kahunas, volume is picking up, still a cheap stock. I might want to look at that one, all right? How about pullbacks to the 50 with a kahuna? My favorite pattern. So let's rank them by force, and let's start looking at some of these and see if any of these looked interesting. Actually, I'm going to rank them by scorecard, which is a balance, fundamental, and technical. I don't want that one. So here is Voya Group, uptrend, pullback, sitting on the 50, kahuna, no thank you. No, bunch of banks. I know I'll find one thing I like because I saw some already. And I'm just looking for a stock that had a big uptrend and is now pulled back to the 50. Sometimes you don't find them. I want to find it. I don't want an Brookfield Asset Management. Well, that might work. So this is a pattern that I like. Uptrend from 37 to 43, pull back to the 50, a mobile breakout from a squeeze and a kahuna, PSAR right under the dot. I might look for this. If it breaks that PSAR dot, that might be interesting to go long. Healthcare Realty Trust. I'm looking for things that actually have had an uptrend. Lots of ETFs in this. So what I'm looking, so this is supposed to pick stocks in an uptrend that have pulled back to the 50, had a kahuna. Here's a mobile breakout squeeze, but it's another fund. Boy, a lot of funds made it into this group today. You just look, see anything down here that looks interesting. So I didn't find anything that I really loved. Again, it was a holiday day. Volume was messed up. Squeezing right below the PSAR dot. This is a group that sometimes I'll find things. Some things will be in the same group, and I do see a couple here that I liked. So to be in this list, you have to be squeezing, which is the mustard color here. You got price has to be right below the PSAR. A kahuna is nice, showing me momentum. And I know that if it takes out that dot, it triggers a Wells Wilder buy. So let's find something that's actually in an uptrend that's basing. All right, here's that BAM again. Same picture, uptrend, pull back to the 50, kahuna right below the PSAR dot. This is one I'd probably put on my watch list. WEX, a little bit too loose. Earnings this week. All right, uptrend, pullback, right below the dot, mobile breakout from a squeeze, pocket pivots, Southern Peru Copper. That looks interesting. I'll show you at the meeting how I buy these, how I look at options, etc. You find, oh, that would, well, I got to go back and look at that because who would think J&J showing up on a list? All right, not much of an uptrend, but a pullback to the 50, right below the dot, and it's squeezing. So those are some of the scans that I use. Now, to be fair, and I do a number of scans within TradeStation, and a lot of them are John scans where I look for certain findings. I play with a lot of different things. play with more than most people would want to play with, to be honest. So, for example, one of my favorite places to look is HCD weeklies. And let me see if I saw anything that comes back and reminds me that I liked it. Actually, these are not, let me just run that while we're talking. They're not updated. I updated them on a different computer and I hadn't brought them over to this one. I'll just run that while we're finishing up here, and then if time allows, we'll go back and look at it. So let's review what I did and what I do. I spend a lot of time, and the PowerPoint takes 20 minutes. To build this PowerPoint, it takes 5 hours of determining what I think the market is doing. I think the market is cautiously going higher and climbing a wall of worry as we get into a very strong time seasonality. Okay. Then I find out what groups are leading, which was when I went to the Woodward and Brown groups number 7 and put a force on it. And found that there were 73 groups with pressure to the upside. Then I right-click on them, and the best stocks come to the top, and we looked at a number of these and found some looked pretty good. Once I've gone through the first 10 or so, then I switch to a bottoms up, and in the bottoms up, I look at my favorite scans, which are the ones that I showed you. Pull back to the 50, and I'll go down this list and see if anything looks attractive. I compile a watch list of stocks that I'm interested in watching. I call them buys, but that's a misnomer because they're stocks I'm interested in that I want to watch during the week. That will be my buy list. I put my buy list into a number of different categories so I get an idea of what's working best. Within that buy list, this was one of my favorite stocks, Flexion Therapeutics. Kind of a flat pullback at the 50 with a kahuna, mobile breakout from a squeeze, everything is green. I'm interested in this. Why? It looks even better in TradeStation. Within TradeStation, I take all the stocks that I'm interested in, and then I go through and I look at them. And I look at a number of different things. I thought Flexion was in here. Let's see. So I looked at Flexion. I looked at it in 3 different time frames. And what I saw was a new John Person buy signal on daily and weekly, a high close doji on daily. I have a program that does automatic trend lines coming off of a trend line. It's got the market catcher is moving up on the daily. It's coming out of a squeeze. Had a mobile breakout. Kahuna force. So a weekly squeeze as well. Looks like it must be an IPO because there's not many months of data. This is one that I thought looked good. So I compile a buy list and then I take them into TradeStation, or I could take them into Thinkorswim and do a similar analysis. Let's go back and see if my scan is done. It is, and so I've now scanned for stocks that are high close dojis on the weekly. This is one of my most powerful signals that I find. And here's Control, one that we looked at. So it's in a huge uptrend. Actually, that doesn't make sense. Hold on a second. Did I do something wrong here? Let's go down here. I'm trying to figure out what, oh, okay. It didn't light up orange because it's in a big uptrend. So even though it's a high close doji, I don't take a high close doji in an uptrend. Let's look at US Steel. I pointed that out. Okay, here's the other reason. Let me take it out of this. I don't have the HCD loaded up there. So let's look at Control and X. And what I'll do typically is I'll take this list that ETF for technology has a high closed doji. That's interesting. Take the list. I'll copy it. Fix this up here. Take it to my screener. And I'll go to the last group so I don't mess anything up that I've been doing for real. I'll put it in page 5, which should have nothing. I'm going to paste them. And I'll go down this list. So I wanted to look at control real quick and show you where it'll turn orange. And then we'll go to US Steel, and then we're going to say goodbye. Here's control. Notice it's orange because it's a high closed doji. I don't take them at the end of a high. Notice it's running right up its trend line, which was automatically generated for me. If I go down to US Steel, here's a stock that's gone sideways, had a high closed doji after a bit of a pullback, so that's meaningful. Running right up its trend line. Weekly, daily is up the trend line. It's in a daily buy, coming out of a squeeze. OBV, strong on the daily, strong on the weekly. I like US Steel as well. And then Flexon, we looked at already. So on that note, I think I've showed you what I do. I've showed you the thoughts of the market. I showed you how I use EdgeRater to get a sense of what's working now. High erg is working. And on that note, I'm going to say goodbye and go out on my boat. You all have a great weekend, great holiday, and I look forward to seeing the folks live. If you're interested in the online version, reach out to me at hgsidoc@gmail.com. Thanks, everybody.